The European Union's decision to slap a 25% tariff on goods imported from the United States marks a pivotal escalation in global trade tensions, setting off what many analysts describe as a full-blown trade war. This move, seen as a direct counter to U.S. protectionist policies, carries a hefty economic toll, with estimates suggesting a $24 billion hit to bilateral trade. The tariffs target a wide array of American products, ranging from industrial materials like steel and aluminum to agricultural staples such as tobacco, poultry, almonds, and orange juice. These goods, deeply embedded in both consumer markets and industrial supply chains, are now at the heart of a growing economic storm. For American consumers, the impact is immediate and far-reaching. The tariffs drive up the cost of imported EU goods, but the ripple effects extend to domestic products as well. As the EU, a key market for U.S. exports, curtails its purchases, American producers face shrinking demand, prompting them to raise prices at home to offset losses. Everyday items, from breakfast staples like orange juice to manufacturing inputs like steel, become more expensive, squeezing household budgets. Small businesses reliant on affordable materials find themselves grappling with higher costs, while industries like construction and automotive manufacturing face disruptions due to pricier inputs. The EU's tariff strategy isn't just about economics. It's a calculated response to U.S. policies aimed at shielding domestic industries. By targeting politically sensitive sectors, like agriculture in key U.S. states, the EU aims to exert maximum pressure. This tit-for-tat approach risks entrenching a cycle of retaliation, with both sides digging in. For instance, American whiskey producers, already hit hard by earlier EU tariffs, now face steeper barriers, threatening jobs in regions dependent on these exports. Meanwhile, European consumers aren't spared, as potential U.S. counter-tariffs could inflate the cost of EU-made goods like luxury cars or cheeses, further straining transatlantic ties. This trade conflict underscores a broader shift in global economic dynamics. As the EU flexes its regulatory muscle, it signals a willingness to challenge U.S. dominance, potentially realigning trade alliances. For now, the tariffs serve as a stark reminder that protectionism can backfire, leaving consumers, businesses, and entire economies caught in the crossfire of geopolitical maneuvering. The escalating trade dispute between the United States and the European Union is taking a heavy toll on American consumers, who are facing sharply higher prices for everyday goods due to retaliatory tariffs. As the EU imposes a 25% tariff on U.S. exports, the prospect of U.S. counter-tariffs looms large, threatening to inflate the cost of European imports significantly. Products like French butter, Italian cheeses, and German wines, long cherished in American households, could see price hikes of 20% to 30%, making grocery shopping a more expensive ordeal. These increases aren't just a minor inconvenience. They translate into a substantial financial burden, with estimates suggesting that the average U.S. family might need to shell out an extra $1,500 to $2,000 each year to cover the rising costs of imported goods. The automotive sector is particularly hard hit. European cars, such as those from BMW or Volkswagen, which are popular among middle-class buyers for their reliability and prestige, could jump in price from $30,000 to as much as $35,000 if tariffs are reciprocated. This surge doesn't just affect luxury buyers. It puts pressure on families who depend on affordable vehicles for work and daily life. Dealerships already grappling with supply chain disruptions may pass these costs directly to consumers, shrinking demand and straining household budgets further. For many Americans, the dream of owning a new car is becoming less attainable, forcing tough choices between essential expenses. Beyond cars and groceries, the broader economic fallout is reshaping consumer behavior. As prices climb, families are cutting back on non-essentials, impacting local businesses like restaurants and retailers. The tariffs also disrupt alternative supply chains, as the U.S. turns to countries like Canada or Brazil to replace EU goods. These shifts often come with hidden costs, higher shipping fees or lower quality, further eroding purchasing power. For instance, replacing European cheeses with domestic or South American alternatives might save money up front, but could disappoint consumers accustomed to specific flavors, subtly altering cultural traditions tied to food. This price spiral highlights a harsh reality. Trade wars don't just play out in boardrooms or government offices. They hit kitchens, garages, and wallets across the country. As both sides dig in, American consumers are left navigating an uncertain landscape where every purchase feels like a small battle in a larger economic conflict. The intensifying trade conflict with the European Union is delivering a punishing blow to American agriculture and key industries, as the EU's 25% tariffs on U.S. goods disrupt long-standing export markets. The EU, a vital destination for American farm products, is scaling back imports of items like California almonds, Florida orange juice, and Midwest grains, creating a cascade of economic challenges. Farmers, already grappling with volatile commodity prices, now face shrinking demand abroad, forcing them to redirect surplus goods to the domestic market. This oversupply drives down local prices for producers, yet consumers see higher costs at grocery stores as supply chains adjust, creating a frustrating paradox for rural communities dependent on agriculture. The ripple effects extend beyond farms. Industries reliant on EU materials such as steel and aluminum are reeling from increased costs. Major manufacturers like General Motors and Boeing, which use these inputs for cars and aircraft, are facing production cost increases of 10% to 15%. These firms have tough choices: absorb the losses, cut jobs, or pass the burden onto consumers through higher prices. For example, a pickup truck or an airline ticket could soon cost more, squeezing both blue-collar workers and travelers. Smaller manufacturers, lacking the financial cushion of corporate giants, risk layoffs or closures, threatening jobs in industrial heartlands like Michigan and Ohio. This economic strain is reshaping entire regions. In almond-growing areas of California, packing plants are reducing hours, leaving seasonal workers in limbo. In Florida, citrus farmers are pivoting to less lucrative local markets, unable to compete with cheaper imports flooding Europe. The tariffs expose a deeper vulnerability: America's reliance on open trade for prosperity. As export revenues dwindle, rural towns face declining tax bases, putting pressure on schools and public services. Meanwhile, manufacturers are delaying investments in new factories, wary of unpredictable trade policies. The standoff with the EU isn't just a numbers game. It's a test of resilience for America's economic backbone. With both sides entrenched, the losses in agriculture and industry signal a broader warning. Protectionism may shield some sectors, but risks unraveling the livelihoods of millions tied to global markets. The United States, under a renewed push for protectionism, is doubling down on tariffs to shield domestic industries, a strategy championed as a way to revive American manufacturing and job creation. Citing past successes, such as a modest uptick in steel output following earlier trade barriers, the administration argues that tariffs are essential to counter foreign competition and bolster local economies. Yet this hardline stance is unraveling global supply chains, sending shockwaves through markets and straining ties with longtime allies. Far from delivering promised prosperity, these policies are fostering uncertainty, stifling investment, and escalating tensions on the world stage. At home, the tariffs disrupt the flow of critical imports like steel and aluminum, inflating costs for industries from automotive to aerospace. Companies face a stark choice: raise prices, cut jobs, or scale back expansion plans, all of which erode consumer confidence and economic growth. Small businesses, already stretched thin, struggle to absorb these costs, while corporate giants hesitate to invest in new projects amid unpredictable trade rules. The ripple effects are evident in factory towns, where hiring slows and local economies falter, undermining the very communities protectionism claims to uplift. Globally, the fallout is equally severe. The U.S. aggressive trade measures, including threats to curb high-tech exports, are alienating partners like the European Union, which sees them as a betrayal of cooperative norms. Allies question Washington's reliability, prompting talks of alternative trade blocs that exclude the U.S. This shift risks isolating America diplomatically, as nations weigh closer ties with Asia or other regions. Within NATO, tariff disputes fuel friction, complicating defense collaborations at a time when unity is critical. The protectionist gamble also carries a hidden cost: eroded trust. Businesses crave stability to plan for the future, but erratic policies make forecasting impossible. As global markets wobble and alliances fray, the U.S. risks not just economic losses but a diminished role as a predictable leader in world affairs, leaving a legacy of division rather than strength. The trade war sparked by the United States, protectionist tariffs, is not confined to its clash with the European Union. It's sending shockwaves across the global economy, drawing in nations far beyond the Atlantic. As the U.S. imposes steep tariffs to shield its industries, countries like Japan, South Korea, and China are poised to retaliate with their own trade barriers, targeting American exports from soybeans to semiconductors. This escalation threatens to choke U.S. farmers and tech firms, who rely heavily on Asian markets to sustain profits and jobs. For instance, China's potential to hike tariffs on U.S. agricultural goods could devastate rural communities already reeling from reduced EU demand, pushing family farms toward financial ruin. The EU, meanwhile, is eyeing broader measures, contemplating tariffs on high-value U.S. products like automobiles and cutting-edge technology. Such moves could inflate the cost of American-made smartphones or software in Europe, eroding the competitiveness of U.S. tech giants and shrinking their global market share. European consumers would face higher prices, too, as iconic American brands become luxury items overnight. This tit-for-tat approach risks fragmenting the global marketplace, forcing companies to navigate a maze of new costs and regulations. Beyond economics, the fallout is reshaping trade alliances. Nations sidelined by the U.S. aggressive stance are exploring new partnerships, with the EU and Asia deepening ties to counter American isolationism. Smaller economies like Australia are pivoting toward China and Japan, sensing a shift in global power dynamics. These realignments threaten to sideline the U.S., weakening its influence as a trade leader. For American workers, the consequences are stark. Fewer export opportunities translate to job cuts in sectors like manufacturing and agriculture, hitting communities that can least afford it. This global ripple effect underscores a critical truth: trade wars don't respect borders. As nations retaliate and realign, the interconnected world economy frays, leaving consumers, businesses, and governments grappling with a future of uncertainty and diminished cooperation. The trade dispute between the United States and Canada, its closest neighbor and economic partner, has taken a sharp turn, with Canada imposing a targeted 25% tariff on American cars. This retaliatory measure, a response to U.S. tariffs on Canadian goods, is driving up vehicle prices across the border, transforming a $30,000 sedan into a $37,000 purchase for Canadian buyers. The impact is immediate. U.S. auto dealerships report dwindling sales, with a noticeable dip in demand as consumers balk at inflated costs. This slowdown is straining related industries. Think auto parts suppliers, insurance providers, and financing firms, creating a domino effect that threatens jobs in American factory towns. Canada's strategy is deliberate, focusing on finished vehicles while sparing auto parts to preserve the integrated North American supply chain under the USMCA trade agreement. Yet, the U.S.-owned tariffs, including a 20% levy on Canadian softwood lumber, are hitting back hard. In Canada's lumber-rich regions like British Columbia, sawmills are shuttering or scaling back, leaving rural workers jobless and communities struggling. The pain crosses the border, too, as U.S. construction firms face higher material costs, slowing housing projects and pinching homebuyers. The human cost is stark. In the U.S., manufacturing plants tied to the auto industry are cutting shifts, leaving workers anxious about their futures. In Canada, lumber-dependent towns are losing their economic lifelines, forcing families to relocate or scrape by. Both nations are discovering that protectionist policies, meant to safeguard jobs, often dismantle them instead, unraveling the shared prosperity built over decades of cooperation. Canada's measured response, avoiding an all-out trade war while boosting domestic support programs, stands in contrast to the U.S. aggressive posture, highlighting a growing rift. This cross-border spat isn't just about tariffs. It's a warning of how quickly economic ties can fray. As both countries grapple with rising costs and lost livelihoods, the dream of seamless North American trade feels increasingly out of reach, replaced by a cycle of retaliation and regret. The United States' aggressive tariff strategy is plunging its economy into a state of deepening uncertainty, with markets reeling from the fallout of disrupted trade relationships. As tensions with trading partners like Canada and the European Union escalate, the ripple effects are shaking investor confidence and raising fears of a looming recession. Stock markets, sensitive to policy shifts, have seen sharp declines, reflecting broader anxieties about the sustainability of protectionist measures. Analysts now warn that the odds of an economic downturn are climbing, driven by the chaos of unpredictable trade barriers and their cascading impact on businesses and consumers alike. In Canada, the government is scrambling to cushion the blow from U.S. tariffs, rolling out robust support programs to stabilize its economy. Initiatives like small business loans and infrastructure investments aim to protect jobs and prevent widespread financial distress, signaling a proactive approach to weathering the trade storm. In contrast, the U.S. is grappling with spiraling inflation, as higher import costs drive up prices for everyday goods like groceries and fuel. This inflationary surge is squeezing households, forcing families to rethink budgets and cut back on discretionary spending, which in turn slows retail and service sectors. The contrast between the two nations' responses highlights a broader issue. The U.S. tariff-driven approach lacks a clear long-term plan, leaving businesses in limbo. Manufacturers, unsure of future costs, are halting expansion, while retailers brace for weaker sales as consumer wallets tighten. Across American communities, the mood is one of unease, workers fear layoffs, and small-town economies reliant on stable trade face an uncertain future. Canada's focus on resilience, including measures to support workers and maintain environmental standards, underscores a commitment to balance, even under pressure. This growing instability isn't just about numbers, it's about trust. As markets wobble and prices climb, the faith of businesses and citizens in a steady economic path is eroding, painting a stark picture of a nation caught in the crosshairs of its own trade gambit. The United States' decision to propose staggering tariffs on Chinese imports has ignited a firestorm in global markets, unleashing a wave of financial turmoil that underscores the fragility of trade-driven economies. These punitive measures, aimed at countering China's trade practices, have backfired spectacularly, triggering a catastrophic sell-off that erased immense wealth in mere hours. Stock exchanges, from Wall Street to Shanghai, plummeted as investors panicked over the prospect of a prolonged trade war, with ripple effects hitting everything from tech stocks to commodities. Even cryptocurrencies, often touted as safe havens, crashed, reflecting the depth of market distrust in the face of such aggressive policies. For American consumers, the fallout is grim. Chinese goods, ranging from electronics to clothing, face steep price hikes, squeezing budgets already strained by inflation. Small businesses, reliant on affordable imports, are forced to raise prices or shutter, threatening local economies. Farmers, too, bear the brunt, as China's retaliatory tariffs on U.S. agricultural exports like soybeans and pork choke off vital markets, leaving rural communities reeling. The pain isn't confined to the U.S. Chinese manufacturers face reduced demand, sparking fears of layoffs in industrial hubs, which could destabilize global supply chains further. The market meltdown reveals a deeper issue. Erratic policy signals erode confidence. Investors crave predictability, but the U.S. tariff gambit, lacking a clear roadmap, breeds chaos. Pension funds and savings accounts, critical for millions of Americans' futures, are taking heavy hits, fueling anxiety about long-term financial security. Meanwhile, China's response, doubling down on its own trade barriers, signals a readiness to endure a protracted standoff, raising the stakes for both nations. This crisis isn't just about trade balances. It's about the fragility of interconnected markets. As wealth vanishes and tensions rise, the tariff escalation with China serves as a stark reminder that economic brinkmanship can unravel prosperity faster than it builds it, leaving ordinary people to navigate the wreckage. The United States is grappling with a rising tide of public discontent as trade disputes and misguided policies fuel economic hardship, igniting protests across cities and towns. From urban centers to rural heartlands, Americans are taking to the streets, driven by soaring living costs, shrinking savings, and fears of an uncertain future. The spark: tariffs that have spiked prices for essentials like food and fuel, coupled with controversial measures targeting immigrants, which many see as divisive and unjust. These grievances are uniting diverse groups, workers, families, even former supporters, who feel betrayed by promises of prosperity that have yet to materialize. The economic squeeze is palpable. Retirement accounts, painstakingly built over decades, are hemorrhaging value as markets gyrate under trade war pressures, leaving retirees and near-retirees staring at diminished futures. Job insecurity looms large, with industries tied to exports, like agriculture and manufacturing, facing layoffs as global demand dries up. For many, the American dream feels like a fading mirage, replaced by daily struggles to afford groceries or rent. This frustration isn't just financial. It's deeply personal, as communities watch their cohesion erode under the weight of polarizing rhetoric and policy missteps. Politically, the backlash is intensifying. Grassroots movements are challenging the administration's direction, demanding accountability for decisions that seem to favor corporate interests over ordinary citizens. Protesters aren't just voicing anger, they're signaling a broader shift, with trust in leadership crumbling. Even loyalists are wavering, stung by policies that hit their wallets and values alike. Social media amplifies these voices, turning local rallies into national conversations about fairness and governance. This unrest is more than a reaction to hard times, it's a cry for change. As demonstrations grow, they expose a nation at a crossroads, where economic woes and social fractures threaten to redefine its political landscape, pushing leaders to confront the human cost of their choices or risk losing the public's faith entirely. The United States, aggressive tariff policies are reshaping the global trade landscape, pushing allies and adversaries alike to forge new alliances that could sideline American influence. As trade tensions with the European Union, Canada, and others intensify, nations are rethinking their reliance on the U.S. market, seeking partnerships that offer stability over uncertainty. The EU is accelerating talks with Asia, eyeing deals with Japan and China to secure supply chains and markets once dominated by American goods. Smaller players like Australia and New Zealand are also pivoting, deepening ties with Asian economies to hedge against U.S. unpredictability. This shift isn't just strategic, it's a reaction to a perceived erosion of trust. Allies like Canada, stung by tariffs on their exports, are openly criticizing the U.S. go-it-alone approach, with leaders signaling a readiness to diversify trade networks. Japan, a long-standing partner, is exploring frameworks that prioritize regional cooperation, potentially leaving the U.S. out of key agreements. These moves threaten to erode America's role as the hub of global commerce, a position it's held for decades. For U.S. businesses, the stakes are high. Reduced access to foreign markets means fewer exports, hitting sectors like agriculture, tech, and automotive hard. At home, the fallout is felt in communities dependent on trade. Ports, once bustling with shipments, see declining activity, costing jobs for dock workers and truckers. Farmers face shrinking demand for crops, while manufacturers struggle to compete abroad as retaliatory tariffs bite. The broader risk is isolation, not just economically but diplomatically. As new trade blocs form, the U.S. could find itself excluded from deals that set global standards, from tech regulations to environmental policies. This realignment signals a turning point. The world is moving toward a multipolar trade order where cooperation trumps unilateralism. For the U.S., the challenge is clear: adapt to a changing reality or watch its economic clout diminish, leaving workers and businesses to navigate a future shaped by others' rules. The United States' abrupt decision to pause its aggressive tariff strategy for 3 months marks a surprising shift, revealing cracks in the administration's economic playbook as markets teeter on the edge. Initially framed as a tactical move to ease tensions with trading partners, this reversal is widely seen as a reluctant concession, driven by relentless financial turmoil and mounting criticism from businesses and allies. The pause comes after a whirlwind of trade barriers sparked chaos, with soaring costs and supply chain disruptions hitting American consumers and industries hard. Rather than a masterstroke, the delay feels like a scramble to buy time in a crisis that's spiraling beyond control. For small businesses, the tariff roller coaster is a nightmare. Retailers and manufacturers, already battered by higher import prices, face ongoing uncertainty, unable to plan inventories or expansions. A cafe owner sourcing European coffee beans, for instance, can't predict next month's costs, while a hardware store struggles with pricier Canadian lumber. This unpredictability stifles growth, as entrepreneurs hold off on hiring or investing, fearing another policy U-turn. Workers feel the pinch too, with job security waning in sectors like auto manufacturing, where tariff-driven price hikes dampen demand. Globally, the reversal sends mixed signals. Allies like the EU, wary of erratic U.S. moves, hesitate to commit to long-term trade talks, while competitors like China see an opening to push their own agendas. The lack of a clear strategy amplifies doubts about America's economic leadership, as partners question whether the pause is a genuine olive branch or a temporary dodge. At home, public frustration grows. Families grappling with rising grocery bills want solutions, not stopgaps. This policy pivot isn't just about tariffs. It's a stark admission of strain. Without a coherent plan to stabilize markets and rebuild trust, the U.S. risks deeper economic rifts, leaving businesses, workers, and consumers to navigate a fog of uncertainty that no short-term fix can clear. The United States is staring down a mounting economic crisis, fueled by trade policies that have spiraled into widespread hardship and eroded public confidence. As tariffs drive up the cost of imports, from household goods to industrial materials, American families are feeling the squeeze like never before. Grocery bills are climbing, car repairs are pricier, and small indulgences, like a new phone or a night out, are slipping out of reach for many. This isn't just inflation. It's a tangible hit to livelihoods, with workers facing stagnant wages while prices soar, leaving little room for savings or stability. The job market, once a beacon of opportunity, is faltering. Factories tied to global trade are scaling back, with assembly lines slowing in places like Ohio and Texas. Layoffs are creeping up, and those still employed worry about what's next. Small businesses, the backbone of local economies, are buckling under higher costs. Think of the corner store paying more for imported snacks or the mechanic hit by pricier parts. These pressures ripple outward, draining community vitality and dimming hopes for recovery. Meanwhile, retirement dreams are fading as market swings gut investment accounts, forcing older Americans to rethink their plans. Public trust is crumbling alongside the economy. People see a government caught in contradictions, promising jobs while policies spark uncertainty. The disconnect between upbeat rhetoric and grim realities fuels anger, with many feeling unheard. Social media buzzes with stories of struggle, from parents skipping meals to keep kids fed to veterans juggling bills. Even those who once backed bold trade moves are questioning their cost, as personal finances take hit after hit. This crisis goes beyond dollars and cents. It's a test of faith in leadership. Without swift, clear action to ease burdens and restore predictability, the divide between people and policymakers will widen, risking not just economic decline but a deeper fracture in the nation's spirit.